Welcome back to the Stock Market Summary Series. Okay, so today, the market's given us a really fascinating kind of mixed picture, especially with that big move we saw in the Russell 2000, the IWM.
Yeah, finally pushing past that critical 200-day moving average, a level watched really closely for breakout potential.
Exactly, something a lot of people were eyeing. But then you contrast that with the NASDAQ sliding down, tech weighing on it, and the S&P 500 just kind of holding flat after yesterday's record high. So why this mixed picture today really matters and, how it fits into the bigger market story.
Wow.
Well, that's what we're going to unpack. And hey, if you find these daily summaries helpful, do hit that like button. It doesn't cost you a thing, but it really helps us out immensely. And click that subscribe so you never miss a beat. You can always unsubscribe later if you don't want these updates. Just a quick reminder, of course, nothing here is specific buying or selling advice. This is all general market commentary and trading education.
Absolutely. And what's really compelling, I think, is how these different moves highlight. Well, it's not just a mixed bag, right? It might reveal something about capital rotation.
Okay.
When you see small caps like IWM breaking out while big tech lags, sometimes that signals a shift, maybe from growth towards value, or just broader market participation beyond those few giants.
Interesting. So not just a one-day thing, potentially.
Could be. Could be a clue about the market's underlying health as we kick off July 2025.
All right, so with that mixed picture from the main indices, what was happening underneath? The Dow Jones, DIA, that looked strong again.
It did. Powered up 0.96% today. That builds on the 0.61% gain we mentioned yesterday. Good follow-through.
Yeah, but then the S&P 500, SPY, it just stayed flat, holding steady after climbing, 0.48% yesterday to that record close?
That's right. And remember, we noted its RSI was up there in the 70-plus zone, signaling overbought.
Overbought.
So this flat performance, maybe hinted at by those doji candlesticks we saw yesterday, it kind of suggests some profit-taking, perhaps. In the large caps, anyway.
Makes sense.
It's a classic example of why reading those signals matters, It could be hinting investors are maybe looking for opportunities somewhere else.
Right. And somewhere else wasn't the NASDAQ QQQ today.
Yeah.
That slipped 0.84%, clearly weighed down by tech. XLK dropped 0.89%.
Yeah. Tech took a breather.
But the real standout, as we said, was the Russell 2000 IWM. Surged 1.03%.
That move above the 200-day, that's not just a line on a chart, is it?
No, it feels significant.
It's often a psychological shift for traders. Could signal a longer-term bullish trend, maybe attract new money, especially for the Russell, given its struggles earlier this year.
So a sustained break there could be quite notable.
It could. And looking at individual names, Apple, AAPL, it kept rallying, building on yesterday's breakout.
Okay.
But then you saw Tesla, TSLA, wow, gapped down hard. Dropped over 5% after that failed breakout attempt last week.
Ouch. That's a sharp reversal.
It really is. And it underscores a key principle in trading, doesn't it? Knowing when to cut losses fast. It's just as crucial, maybe more, for long-term success as letting your winners run. It's something we focus on a lot.
Okay, shifting to sectors then. Healthcare, XLV, that led the way up 1.42%. And retail, XRT, wow, soared 3%.
Yeah, retail had a great day.
Meanwhile, technology, XLK, lagged, like we said, down 0.89%.
Understanding these sector rotations, reading the technical levels like that IWM 200-day, managing overbought signals like the SPY's RSI, it's all fundamental.
Right. And it's the kind of practical stuff, the how-to, that we really dive into deeply in the Grok Trade mentorship program.
Definitely. Now, moving to the broader economy. Consumer confidence was unchanged today. June's University of Michigan index did rise, though, to 60.7.
Sure.
Inflation data, the PCE, that was static, too, just a 0.1% increase reported for May.
Okay, let's check in on crypto and metals then. Bitcoin, BTC.
Pulled back a bit today, 1.3%. It's testing those converging 20 and 50-day moving averages right now.
The squeeze.
Exactly. Yesterday, we flagged this setup, saying it was building energy for a potential breakout, maybe around $108,000.
Right, building energy, meaning that tightening price range, yeah.
Precisely. Often with lower volume as everyone waits for the decisive move. So we're watching really closely to see if it holds these support levels. Still cautiously optimistic there.
And gold, GLD.
Gold jumped 0.89%, pushed back above its 20-day moving average, showing some signs of stabilizing after that drop on Friday, the 1.81% fall.
Good to see. And silver, SLV.
Silver dipped just slightly, 0.24%. It's kind of hovering around that $33 level, almost like it's trying to make up its mind,
Indecisive.
Yeah, both metals definitely still on the radar.
Okay. Hey, by the way, guys, if you've got a stock you're watching or maybe a question about the markets, drop it in the comments below. We might just cover it in an upcoming summary.